Joining us today on Wall Street Silver is Peter Krauth, editor of the Silver Stock Investor newsletter. Peter, how are you doing today, sir?
I'm great, Ivan. How are you?
Oh, we're doing really good. We appreciate you taking the time to talk with the community today. You have a target that's pretty far away from where we are at right now for the silver spot price. How do we get to your target of $300 silver, Peter?
Let me just say that I'm sort of looking at that as a probably quite a longer term. Obviously, it's a very high target, and my guess would be that if we get to that sort of price, it could actually be some sort of a bit of a spike to $300. And yes, I mean, I realize that it does look kind of wild to some people, but I'm sure if you told someone back in 1970 when the silver was $1.30 that it was going to $50, they would have thought you were crazy as well. So, so that's I'm just kind of want to set the stage there a little bit. $300, a couple ways you can get there a couple of ways. One is if you look at when silver reached its peak in 1980 at let's say $50, and you use inflation. Well, if you use government inflation, you're probably going to be at somewhere around $150, $160 today. I don't use government inflation because I eat, I drive, I have to live somewhere. So I'm looking at more like 7 or 8% inflation realistically over that sort of time frame. And that brings me to a range somewhere around $240 to maybe $360. So right in between there is 300. So that's one way to get to that target. Another way is if I look at where I think I see gold going, because if obviously the gold silver ratio is something that many people look at. It's certainly been somewhat predictive over time, and if you look at previous bull markets and so on. And I think that ratio is going to eventually drop down to about 15. And my, I think, relatively reasonable, realistic target for gold is around 5,000. And if you look at a ratio of 15 to 1, that brings you to a little over 300 in silver. And so those are just two ways that I can relatively easily get to that sort of target.
I'm curious. You wrote an article on cryptocurrency. I'm curious as to your take on recent market action with crypto, how Bitcoin and Ethereum and the rest of them just sold off like crazy. They seem to be recovering a bit. Do you think this is like a long-term bear with them? Do you think there's going to be obviously some sort of movement to replace them with some sort of crypto that will be backed by precious metals, and how do you see them in the future, especially in relation to precious metals?
Okay, so I mean, I think that cryptos are here to stay in some form. There's no question that central bankers and central planners are not crazy about, especially the ones that have a limited inventory, limited supply, and are decentralized, and basically that they have no control over. So that's, to me, a given. Despite that, I think there is a place for them. Let's talk Bitcoin. Bitcoin's the king of cryptocurrencies for multiple reasons. If we talk about Bitcoin, I think it's going to still be around a long time from now. I think that it's probably unlikely to compete with a widely accepted, widely circulated, government mandated kind of currency because of how it's built. And because of how it's built is what has attracted so many people to it. The fact that it's decentralized, the fact that it's not under government control. Regulating it is one thing, controlling it and issuing it is another. But I think that ultimately, and that could be, even as much as a couple of decades down the road, I think we could be headed towards some sort of a major financial reset. For me, as a student of history and a student of monetary history, I believe gold and silver have a place and will continue to have a place. And that place may be in many ways a similar place to what Bitcoin eventually will have. I don't think that Central planners will accept precious metals backed cryptocurrencies, as replacements. But are we going to get to some sort of a point where there is, a bad enough sort of global financial crash that there is a reset? I'm willing to give some leeway for the fact that if there is a severe enough crash, that the people will demand some kind of a stable, a reliable, intrinsically valuable crypto. And I do believe that precious metals have a place in backing crypto that eventually will set some sort of a standard for currency.
There are two or three, I won't call them cryptos, we'll call them the digital tokens that are already gold and silver backed. And the most notable ones off the top of my head are Kinesis, Load, and what's that third one, guys?
Oris.
What was it?
I believe it's Oris.
Oris or Moderno or something. I guess there's several.
Okay.
The one I'm using Kinesis right now, and it seems I have several hundred ounces in what they call their silver version, and it has a debit card with it that I can actually use, and all I have to do is shift a little bit of silver over to my debit card, and you can shift it into euros or US dollars or whatever. It works really well. I'm not using it regularly, but I've used enough of the system where I could imagine someone opting out of a Fed coin or a Euro coin, or if there was a mandated government Fed token. I already see the infrastructure in place at some of these other, Kinesis type organizations, where I could just keep all my resources in silver or gold, and it floats. Literally, the value of my account floats up or down in dollar terms or euro terms. I can see it. So, or you can even trade it into Bitcoin or Ethereum at a moment's notice on their platform. And I'm already seeing the infrastructure for opting out of that type of Fed coin or mandated system, which I think is going to be very attractive to a lot of people to avoid tracking. That's the big fear in some sort of mandated Fed coin system, is the government tracking on all your transactions.
Yeah, absolutely. I mean, I agree, and I believe that's the reason that central bank digital currencies are coming for those benefits to them, certainly. And I agree with you. The infrastructure certainly looks like it's there, and it's coming and it's growing for people to shunt, perhaps chunks of their assets into these precious metals backed cryptocurrencies or digital currencies. Right now, I think that, and perhaps for some time, the challenge is going to be the volatility, right, with the underlying asset.
So now you're pretty heavily involved in, your business is newsletter writing. Is that correct?
That's right, exactly.
And you focus mostly on mining companies.
That's right.
So now, that aside, do you personally hold any precious metals yourself, physical metal?
I do own some physical metal, small amounts, and I certainly like some of the ETFs. I'm very particular when it comes to that. I have a bias towards the Sprott ones, just because of my knowledge of how they work, and sort of who's behind them and so on. And beyond that, I'm very comfortable with sort of higher allocations to the mining companies, again, because of my work and the time I spend researching. And, I'm certainly able and willing to live with quite a bit of volatility, which that comes with.
Give us your top three mining picks. Let's hear it.
Okay. So let's go with one in each sort of category. So the first one is Wheaton Precious Metals. That's for the no-brainer, hands-off, I want to be exposed to gold and silver. I want to have a lot of the upside, very little risk. And compared to, direct exposures or relatively direct exposure to silver or gold, tremendous leverage to the metals with, again, so little risk. That's sort of an easy one. I'm going to say in the mid-tier / developer, I like Go Gold. This is, despite the name, this is a silver play in Mexico with that actually produces, I think it's somewhere around 2 million of profits. I'm trying to remember now if it's quarterly or monthly, but they do very well. And this is from a tailings operation that they're reprocessing, and they have a development project that is quite high grade, also in Mexico. And they're totally self-financed, taking the profits from the tailings processing and using that to help fund the drilling and the development of their other project called Los Ricos North and South sections. And then in the juniors, I'm going to have to say that despite a considerable bump lately, probably one of my favorites is Black Rock Silver. This is a Nevada play. I've been a fan for quite some time. They've just gotten a big vote of confidence from First Majestic that bought up a portion of the company. And they just continue to hit really nice high grades. Looking forward to a maiden resource, and that's somewhere down the road, I believe, this year. And in a great jurisdiction, Nevada, the Silver State. I just think tons of potential there. Potentially a little rich right now, given the how the price has moved up. But a great sort of longer term hold as well for in this space, and something to probably accumulate on weakness.
How are you coming up with your picks on stocks? How do you evaluate them? What do you like to see? That kind of thing.
Yeah. Well, as I say, I cover everything from, we have in there a couple of ETFs, just so that anyone sort of, new subscribers, anyone new to this sector could kind of jump right in and not have to think too much if they just want to start participating right away. So I've got some ETFs that are silver ETFs, and then you've got silver equity ETFs, some larger, and then some more junior targeted ETFs. And then from there, I go from the larger producers down to the mid tiers, the developers, and then the juniors. And I got 3 main criteria when I pick stocks. Ultimately, I want it's got to be great management, it's got to be a great asset, and it's got to be in a workable place, a decent jurisdiction. So those are my initial filters in terms of how I get to companies that I'm willing to spend some more time doing digging deeper and doing some more research on.
Peter, you've written about silver being what you call sticky money. Could you explain that concept to our audience, please? Absolutely.
So in doing my research, this goes back a couple of months, and I remember thinking, I'm curious about how investors, silver buyers, react when silver prices dip. And, other than buying physical silver coins and bars and so on, that's one thing that's maybe a little bit sort of harder to track, especially on a weekly or a monthly basis. But the silver ETFs have regular data that comes out. And so I came across a chart that shows how silver holdings in ETFs, and this is the major ETFs, track versus the silver price.
I think I have that right here.
Yeah, it was a really fun chart to sort of pick apart. And as I sat there looking at it, it hit me that when the silver price dipped, now whether that was a gradual fall in the silver price, which, for example, that first yellow arrow shows that a little bit better. So sort of mid 2016 to early 2017, silver price fell off more gradually. If you look at what happened in the ETF holdings, they barely budged. And then you look at what happened the next couple of times that silver dropped off. It was a similar reaction. Then when we look at maybe sort of the standout, which was March of last year, there was a spike lower in the silver price. And in fact, interestingly enough, the silver ETF holdings actually rose in that period of the drop off. And then if you look at more recently, this would have been, I guess, in the sort of the first part of 2021, the silver price came off again until it spiked, as we all know, in late January, early February. Again, silver ETFs, the overall holdings, barely budged, certainly proportion-wise, much lower when they do fall. And so it kind of hit me that, I mean, we've known for a long time that silver buyers tend to be long-term holders. They will buy, especially in ETFs, they'll buy the stuff, they'll basically sit on it. It's the institutional investors that tend to be the ones that tend to move in and out of it more easily. And so I realized that it's been called sticky investment. And so that kind of came to mind, the name of the article. I said, you know what, I'm going to call this Silver is Sticky Money, and kind of go through and explain and show what the behavior is like. And if you'll allow me, it brings me to another point, which is when I look at, the kinds of numbers that are put out by the Silver Institute, for example. And in fact, just about a month ago, they came out with their annual survey. And if I look at, this is maybe boring for some people, but the actual raw numbers in terms of what happens on a supply-demand side of things, they actually will show net investment into exchange-traded funds as a separate line. They sort of factor it out of the aggregated demand. And that's, I mean, they do it for a specific reason. I've actually spoken to the people who sort of calculate all these numbers, and the explanation is that because these are 1,000-ounce bars that go into the ETFs, and because that money can come out fairly quickly, and sometimes it does come out fairly quickly, it makes sense to show it separately. If you look at net physical investment, and that's things like coins and bars, that gets bought, and for it to end up in ETFs, it needs to be transformed and needs to be melted down and made into 1,000-ounce bars. Again, the ETF silver is 1,000-ounce bars, and technically can and sometimes is sold off very quickly. So it's shown separately, but nonetheless, what we've seen over a decade is that, if you look at the annual numbers of silver that goes into ETFs, there are very few years where there's a net outflow. It's been mostly net inflow. And last year was clearly a massive standout. 331 million ounces went into ETFs. On top of that, you had, I'm looking at my numbers now, net physical investment was 250 million ounces. So between the two, 500 and, if I got the numbers right, 580 million ounces went between net physical investment and net ETF investment. That's over 500 million ounces that went into physical silver that, as we know, tends to be quite sticky.
I am going to share a chart with you from SRS Rocco that demonstrates exactly what you're talking about right now in terms of this. The at the top, it's basically showing you global mining production, and the blue section of 2020 and through March of 2021 is showing you how much of the percentage of global mining production that is going into ETFs and individual, retail demand. That's what is demonstrating and showing you how that's changed compared to previous years. We interviewed Keith Neumeyer from First Majestic, I don't know, about a month ago. And right when that Silver Institute report came out, and I think his quote was, he's got 50 copies of it and he's throwing them all in the garbage can. He thinks their data is just complete garbage.
Yeah.
He thinks CPM has no clue what they're talking about. And one of he told us personally, he has investments in 3 different recycling companies for silver, 2 of which have gone bankrupt, and the third one is just barely surviving. He thinks the number from the Silver Institute for silver recycling is entirely fictional. They're estimating, what number is it, Peter? 170 million ounces?
2020 was 182.
Yeah, he says that number is just complete fictional.
Wow.
There's just no market for, and this is a guy who who has a stake in 3 recycling companies. And
right.
I'm paraphrasing from our interview. If people want to go listen to the
no, you pretty much nailed that one, Jim. I remember it very well.
Yeah, he was making the argument that it is impossible to recycle silver profitably with silver in the 20s. I mean, you may get it incidentally when you're going after the gold in electronics or something, but if you're just going specifically after the silver, you're not going to make money recycling unless silver's at $70 an ounce. And this is a guy who and the other thing he pointed out is these companies are all private. He says the supply numbers in the Silver Institute's data are probably accurate because all of the miners are probably public, and so most of them are. And so that data is available. The demand side numbers for both industrial consumption and investment demand, that is a totally different story because these companies are all private, or mostly. They don't release this data. It's not singled out in some line item as for Tesla saying this is how much silver we consumed. So it's very hard to find this data. And the recycling number, he said, is just entirely invented at the Silver Institute. So I don't really know how anyone takes the Silver Institute seriously anymore.
I mean, I agree that trying to get these numbers, that's not something that I've ever sort of discussed with anybody there in terms of how those are produced. But I could certainly imagine that they would be difficult to obtain. It makes sense. These companies being private, how can you possibly, or how can you properly come up with those kinds of numbers? Honestly, that is, to me at least, that is a question mark. I certainly, use the info for sort of an overall picture of where things are heading, trends and so on. That's probably, I guess, it's mostly useful to me. And if I think about what you were saying earlier about the Sprott silver ETF, the PSLV, and that it's a one-way trip and so on, I've been telling subscribers that given what it's costing now to buy physical silver and the kinds of premiums that you're looking at, which very easily are reaching about 50% these days still, and the margins are, sorry, the premiums or the premium above spot for the over the NAV at the PSLV is actually quite minimal, especially compared to buying physical silver these days. And I'm not saying that they're equivalent. In my mind, certainly they're not equivalent because you're not holding that silver in your hands. But at least in the meantime, to me, that is probably the best way to go. If someone has a certain amount that they want to allocate to silver, maybe go out and buy a little bit of physical silver because it makes sense to actually hold some. But these premiums are really sky high. And perhaps, at least in the meantime, maybe yes, maybe no. Maybe it'll take another 6 months, 12 months. Maybe some hype will sort of wear off a little bit. We're going to get premiums to come down. I don't think they'll come necessarily back down to normal, which is closer to maybe 15%, 12 to 15%. Maybe they'll come back down to 20. But when we do see them come down, and someone wants to buy more physical silver, to me that will make more sense at that point. Perhaps they can liquidate a little bit of their ETF holdings, shift it over to physical, and sort of time things that way, and not have to deal with such high premiums. That certainly, I think that what's going to happen is that over time, at least, with physical silver prices just so high and premiums so high, I'm not convinced they're going to drop, like I just said, all that much. I think that what's going to happen is that spot prices are going to have to rise to catch up to physical silver. There's this discrepancy that does not make sense, and as I'm amazed in some ways to see how long this has held up so far. I mean, we're looking at from what I remember, March of last year is when people sort of started piling into physical, and the dealers were almost immediately sold out, and the premiums have stayed at these levels ever since. And so
you're referring back to March of 2020 when
that's right.
Silver got as low as 14. But at that time, we've interviewed Andy Schechtman and a few other bullion dealer CEOs, and they've told us, I don't care that spot was 14.
That's right.
The retail online companies, they said I was never able to buy it at 14.
Yeah.
Exactly.
It's like, so the lowest you ever saw.
It becomes a fictional number. It becomes a fictional number. What does spot practically mean anymore? I mean, obviously, I talk about it all the time because it's out there. It's what everybody kind of sees, and I'm not going to start quoting, at least not yet. I'm not going to start quoting, prices for physical silver with premiums. And if you're looking at 1,000-ounce bars, you're still looking at maybe 1% to 2%. So in that sense, spot is something that we can use as a gauge. But it's true. You want to actually own some silver. That spot price is irrelevant today. It really is.
We have a member on Wall Street Silver who very closely tracks all the data from both COMEX and Sprott, and he's calculated that Sprott has been buying 53 million ounces so far year to date for the PSLV, which equates to about 1/6 of global mining production so far year to date. Just an insane number. And Sprott is actually paying over premium to acquire their 1,000-ounce bars. And it's been calculated by, his name is Ditch the Deep State. That's his username on our forum. But he's calculated they're paying about $1 over spot to acquire all these 1,000-ounce bars. The way PSLV works, the only way they can acquire those is if there's volatility and if the shares are trading at a premium to net asset value. So the fact that that's happening is what allows PSLV to go out and acquire so many 1,000-ounce bars at a premium over spot price.
That makes sense. I mean, everything I've seen indicates that the markets are very tight. I mean, if for example, we were talking before about the net investment into ETFs last year, 330 million ounces. This year so far, I'm told, is that there's been some selling, and that it's probably down closer to about 90 million ounces that has moved in. The Silver Institute's forecast for 2021 was that it would go up this year by about 150 million ounces. I think that's going to end up looking relatively low by the time we get to probably Q3 or Q4. But if you factor in, and we talked about silver being sticky money, like I say, if I look back at 10 years. There have been probably 2 years where there were some notable outflows out of investment silver ETFs. 1 year was nearly flat, 2014. 2015 was 17 million, which isn't that big. And then 2018 was 21 million. Compared to 2019, where 83 million went in. And then you had four times basically as much went in 2020, and probably at least another 100 million ounces have gone in this year. So if you just for 2020, if you factor in that, and if we accept that that money goes into those ETFs and essentially stays there because it's relatively sticky money, then the shortfall in the silver market last year was 250 million ounces. That's a quarter of the entire silver market.
Wow.
A quarter of a billion ounces. The market was short a quarter of a billion ounces last year. That's just wild. You know, how many?
Well, you sound like a guy who analyzes where the flows are and where the silver is. Where is that deficit coming from then to meet this demand? Where is it coming out of?
You know, that's a bit of a puzzle. Maybe Keith Neumeier has an answer. I don't know.
Well, I mean, we do a lot of speculation on Wall Street Silver as to what's going on.
Sure.
This is one of the best ones that we have from Ditch the Deep State. And you know, our group is notorious for being behind the silver squeeze. I don't know if you know that, but that's who we are. We are the manipulators that the CFTC is talking about. And we enjoy the process. You know, hey, just to explain, Wall Street Silver is all about having fun, sharing pictures, entertainment. Taking down the COMEX, that's something we just do on the side for fun. It's not our main goal. It's just a feature. So I just want to clarify that. So on this graph, you see roughly on the vertical line where the silver squeeze basically started. And what this graph is showing is the blue line represents COMEX registered inventory. And the red line shows PSLV Sprot's incoming inventory. And you can see since late January, early February, that Sprott just went into overdrive. They issued a $3 billion shelf offering. And this is actually out of date. It's up to 53 million ounces they've acquired year to date. And you can see that COMEX's inventory is declining proportionally. This graph, what's happened is we've inverted the COMEX decrease and shifted it by 26 days. And because there's some, you can see the rise in PSLV coincides almost perfectly with the decline in registered inventory from COMEX. And that doesn't mean that PSLV is taking delivery of bars from COMEX, because it's my understanding they do not actually take delivery from COMEX. But what PSLV's traders do is they go out and they're acquiring 1,000-ounce bars from the same sources that normally deliver to COMEX. So what I think is happening here and what the data is showing is that the standard number of people who are taking delivery from COMEX is still occurring, but COMEX is not getting replacement inventory because Sprott is intercepting it all and outbidding everyone for those 1,000-ounce bars. And that's what I think is happening, is it's gradually coming out of COMEX and London LBMA because Sprott's outbidding them at the smelters, at the refineries, at the wholesalers, wherever it is they acquire, wherever it is anyone acquires 1,000-ounce bars for, Sprott is out there buying 1/6 of global mining production right now and outbidding everyone.
It does. In fact, if we think about what's sort of jumping out at me right now is that, you know, like I was saying earlier, my estimates of how much has moved into ETFs so far this year is probably somewhere around 100 million ounces. So that what that chart tells me is that Sprott's taking half of that already.
Yeah,
50 million has gone to Sprott ETFs. So that's quite impressive.
And they still have another 70 million, you know, based on rough calculations of their $3 billion shelf offering. They've still got capacity as long as there's buying going on in PSLV and it's trading above net asset value. Sprott has firepower for another 70 million ounces.
Exactly.
Roughly. I'm just, you know, rough calculations. And who's to say Rick Rule may step up and as soon as he gets close to that one, he may issue another $3 billion shelf offering and keep going.
Well, I do remember seeing Rick in an interview and, you know, he was saying that they're able to when, you know, because when they started this silver ETF, you know, they knew that they would do it if they had the capability of getting the inventory. He said something along the lines of, you know, if people are buying our ETF, we can get the silver. Now I remember him saying also something along the lines of, my traders, maybe not so happy because, it's on them to source the stuff, and it's a bit of a challenge, and it's not necessarily immediate some of the time, but they're getting what they need to get in order to fulfill, all that buying. And so that certainly is the ETF of choice for silver in my book. Absolutely.
Were you paying attention to what was going on in late January, early February regarding SLV and the controversy regarding their supposed claims that they bought 20 million, 130 million ounces in 3 days?
Yeah, I was following that, and I can't help but wonder, given the LBMA's recent flip-flop in April, saying that their inventory at the end of March had
106 million ounces there. Yeah,
exactly. And that's close to, if I remember right, close to the amount that ended up going into SLV in those few days.
Or they claimed went into SLV. I don't know. I hate to be a conspiracy theorist, but it does smell really bad because, there were a lot of experts who came out and were talking about this, the physical impossibility of acquiring, 100 million ounces. It was 130 million ounces over the course of 3 days. And on one of those days, I think it was the Monday, February 2nd, the price of silver dropped. How? And that was the day SLV added something like, 40, 50. I mean, if Chris Marcus were here, he'd have the number off the top of his head. But it was some ungodly number that was record, the largest daily inflow into SLV by a factor of 3. The record had previously been set the Friday before that. If that Friday record had not been set, Monday's action would have been like triple their previous record. Inflows into SLV, an ungodly amount of silver that represented something like, 20%. I want to say 10% of global mining production in one day. And the price of silver dropped that day. That is just total bullshit. And I got to think to myself, all right, I'm the guy selling silver to SLV that day. And these guys are coming at me trying to buy 10 million ounces, 20 million ounces. It's like, don't you think this is, all right, I'm going to raise the price now. I'm going to, these, why would they say, oh, yeah, let me drop the price by $1 for you if you're buying 10? Who in their right mind sells someone 40 million ounces of silver and drops the price while you're doing it? It's just, it makes no sense to just anyone. And I have yet to hear a good answer for that.
It was a volume discount, Jim.
Volume discount. They must have had a Bed Bath and Beyond 20% coupon or something that weekend. I don't know what happened, but it
promo code.
It makes no sense to me. Maybe Silver Gold Bull had a special for the SLV.
Promo code, exactly.
Thank you again, everyone from the Wall Street Silver community.
Thank you.
Awesome.